We're not live? Ooh.
No.
So I have to be on the page for it to start going live. No, I think yeah, we're 3 minutes in. Oh, so I guess it was recording, but we just weren't live. So they'll have access to the intro part here in a second. Yeah, if you guys missed the first 3 minutes, then you can just rewind it. But second and third order magnitude effects is like the Fed has a specific policy that they implement, and then every central bank in the world has to adjust because they have to keep the game equal. If the Fed is very aggressive and they're pumping money in the system, but other central banks don't do the same thing, then the value of the dollar versus other currencies gets very different, and it makes it hard for them to operate in the world with a very expensive dollar or a very, very cheap dollar. And so if the dollar is too expensive or too cheap, what it does is it hurts either imports or exports. So if your currency is very weak, right? You overprint it. Now it costs more of your currency to go get other stuff in the world. And so to import, it now becomes very expensive. And then same with if your currency is too strong. Now people have to pay in your currency to get your stuff. And so people stop buying your stuff. Your exports start to take a hit because it becomes too expensive for your partners to do business with you. And so the Federal Reserve's policy not only has these domestic effects, which is consumer spending, consumer lending, and commercial lending, but it has international and geopolitical effects, which is the rest of the world is tired of the US using the dollar as a bullying tactic or as a sort of as a power tactic. We get to make other countries do what we want because we have global currency dominance. And we can see it with the whole BRICS alliance, so Brazil, Russia, India, and China, and a few other countries teaming up, and Russia and China to team up in order to sort of counterbalance the US's dominance. Now, if you look at if the dollar is the world's reserve currency and this is affecting politics and economic policy all over the world, then Jerome Powell and the Fed are the ones in charge of the dollar. So they are the central party here that impacts the whole relationship with the world. So, what does that mean? It means that American policy typically, well, every country's policy is typically selfish first. Your job is to take care of the security and the prosperity of your people first. And so the Fed has been making decisions in order to reduce inflation in America while making it a bit harder for the rest of the world because Europe couldn't raise rates as fast. When you raise rates, it crashes your economy. So if you got a weak economy like they do in Europe, you can't afford to make the same moves that we can here in the US. You have to keep your rates reasonably low so you can stimulate economic activity. And so we forced the entire world to start raising rates, which hurt everyone else more than it hurt the United States. And now, Japan is dealing with severe, severe issues because of our high interest rates, and they have a zero interest rate policy. And in real terms, their interest rate is actually negative, right? So imagine being the Japanese central bank and then having this very expensive dollar and then having your currency completely destroyed. And then you have all the other countries which are somewhere in between on that spectrum. So this week is important. We're just to kind of break the predictions. Let's go through predictions for this week and let's talk about second, third order magnitude impacts of the Fed's decisions to either raise or not raise rates. So let's go to the CME Fed Watch tool just to show you guys the probability of basically my prediction is no rate hikes, or sorry, no rate cuts. Originally, we entered the year with an expectation of 7 rate cuts. That's why the market had been pumping up until the beginning of this year and even still through the entire year. Okay, the expectation of potential rate cuts this year. But there was another thing, which is even without the rate cuts, the market was relieved to know that we are at the end of the rate hiking cycle, that we're not going to go higher, and that we're just going to be basically higher for longer, which the market can understand and wrap their heads around. However, once the expectations went from 7 to 5, and then from 5 to 3, and then from 3 now to maybe 2 or 1 or none, now the market is waiting meeting after meeting to see if this is real because no one trusts Jerome Powell when he says no rate cuts. They know that he's in the end of his career at the Fed. He's a historic central banker and he has the chance to walk away with one of the best legacies in central bank history, right? Getting us out of basically trying to do what he did in 2018 and 2019 to stabilize inflation and get some price stability, and then getting us out of COVID. Even though he's blamed for pumping all the money in, it's really the Treasury that sent out the stimulus checks. It's Congress that signed all that money into law, and the Fed just basically did their job by providing the liquidity for it. And so Jerome Powell has a great record. He doesn't want to be the guy to crash the whole thing and walk away, right? It's going to be the next person's problem. So we don't believe, typically as analysts, economists, traders, investors, and market participants, we have a hard time believing Jerome Powell when he says that he's going to be aggressive for a while and that he's putting his foot down and that nothing is going to change his mind. And so that's why, there's still a chance for 2 or 3 rate cuts this year. But every meeting, those probabilities get worse and worse. And people are starting to catch on like, hey, maybe we're not getting a rate cut this year. Okay. And that's my prediction, is that we might see one, maybe none. And even if we do see one, as I've said before, it's going to be 25 basis points. Just fucking nothing. We're going to go from 550 down to 525. Or we'll go from 5.25% interest rates down to 5%. None of your mortgage rates and your credit card rates are not going to change. Okay, neither will your car loan. All right, let's all go refinance because of 25 basis points. So regardless of what happens, I think it's all going to be irrelevant. And then the rate cuts next year, that's where we start to get into some interesting territory. Okay, now let's take a look here. These are the probabilities of the interest rate cuts depending on the Fed meeting. The percentage that you see here is the percentage likelihood. Okay, the blue is the actual. This is the percentage chance that we get a rate cut, or that we don't get a rate cut, excuse me. All right, 98% chance that there's no rate cuts in this meeting. All right, May 1st, this is on Wednesday. 2.5% chance of a rate cut. Let's look at the June meeting. 11.5% chance of a rate cut. Y'all betting on this? I ain't putting my bet on 11.5. Talk about a parlay. Talk about an underdog. Right? Talk about a spread. They said, "What's up, Roy? Hope you're doing well. I'm living the dream, people. I appreciate you for asking. Roy, it's my birthday. Blessed to learn from the sensei, Steve. Happy birthday, right? Say happy birthday, Steve, in the chat. Stones some love. Steve, unless you're just I don't know Steve, right? Steve, I hope you're a good dude, because we about to throw you some love, right? Regardless, 23%. Imagine, this is what goes through my head whenever I'm just showing random people loving the, like, imagine this, like, I'm not gonna put that on you, Steve. I'll use this example for somebody else. I was gonna say, imagine this dude's like the hash slinging slasher, right? And I'm just like out here fucking showing him love. Everybody's showing him love. I don't know, guys. This is what you got to do when you're in the public, and you don't teach you this stuff, right? Christine, this isn't in the fucking licensing books, right? I don't know. The hash slinging. No one got the hash slinging slasher. It's a obscure cultural reference, but no one watched mindless cartoons as children, right? I wasn't allowed to. I was out here pirating mindless cartoons. All right, fuck it. 23% chance of a rate cut in the July meeting. Jump forward to the October meeting. There's about a 45% chance. Still not betting on those odds. 45% chance in the November meeting. I think no fucking chance that we see a rate cut in the meeting. And I actually put the chances of a rate cut at the end of the year. I actually put this very high, only because of Jerome Powell's track record of providing that Santa Claus rally or that December surprise. Okay, he has a very good habit of getting up right before the holiday season and telling everybody the economy's great, next year is looking solid, we got it all under control, and we have this massive rally right before the holidays, and everyone's happy and goes into the holiday season and New Year and everything feeling good, and then he delivers that January, lays it down on the table and lets them know what time it is. This year, he delivered a pretty positive remark where he was kind of more optimistic about the chances of rate cuts this year. But we watched that Fed meeting live together, and we saw him say that they're still putting the 2% inflation target as their number one priority, and that we're still a long way from getting to that point, and that the market shouldn't get ahead of itself. And the market was like, dirt. He said, markets go up, and we just been pumping ever since. So, yeah. Will Jerome Powell cave this year? I believe so. I put the chances of a rate cut later in the year very high. Next 3 meetings, chances, no rate cuts. That's my prediction. Now, markets, how will they react to the no rate cuts? Let me get your predictions. Put a 1 if you're bearish, if you think that no rate cuts means higher for longer, higher interest rates for a longer amount of time. And that's not necessarily positive for stock market flow historically. Now, let me know what you guys think. Put a 1 if you're bearish, put a 2 if you're bullish for the stock US equities based on Wednesday's decision. Happy birthday, Steve. Yep, yep. Good stuff. Do you have a Telegram group? We have a Discord channel. The only way to get in is to go through the master class. All right. So if you're willing to go through the work, it's not really the work, but if you're willing to take trading serious and learn how to really trade and how to have a systematic approach to trading rather than just sort of learning a step-by-step technical strategy, and you're able to think about risk, probabilities, and have the emotional discipline. If you're basically, if you're willing to like, if you want to be a trader in the long term, not just one of these journeymen or kind of just like dabbling in it, if that's you, take the class, get in the group, come join the best. If that's not you, then you might as well just fucking pick up Amazon right now, because the sooner you start, the sooner you're going to pick up some momentum. Okay. Put a 1 if you're bearish on stocks, put a 2 if you're bullish. ChartAddicts members, I see a lot of 1s. Where's Mo and TC when you need him? Let me ask you guys, anybody here know Mo? You guys know Mo just enough? What do you think Mo would say if he was here? Yeah, Romy's been around the
Bullish.
block. Yeah, Roman's been around. Max, did you say bullish?
Yeah, I'm
Yeah.
talking to Mo too.
Yeah, I was hoping that you'd be the one to answer that. Tell Mo get his ass on the Zoom, man. Tell
I'm
him, tell him to
texting him.
provide some reason. All right, let me see here. Okay. How often are the master classes? We try to do monthly. Sometimes we got to push them a little bit by a few weeks, so they end up being like every 45 days. But 45 days in trading terms is a long time, right? It's not a long time in the grand scheme because we're looking at quarters and annual performance. But in terms of how much profits you're missing out on, 45 days is a lot of fucking time. That's a whole, like, that's a quarter almost. I lied. That's half a quarter, basically. All right. So we got a bunch of 2s. Bully market. Pedro, so what's up? Good to see you, Roy. Good to see you too, Scott. Okay, we got Sean, Chris. Chris is bearish. Talha bearish. Fiona bullish. Justin bullish. Those who said bullish, why? Sujal said full mode bearish. Yields are very high. Wow. And thank God that YouTube comments don't move markets. AI tech bubble. This boy, what, buddy? You're watching too much YouTube videos, man. I think the AI tech bubble is going to end this week. This week? But you think AI is a bubble? But it's an AI bubble once you start seeing companies with absolutely no revenue getting seeded with unbelievable amounts of money. Right now, it's happening in rare cases. There's a ton of AI companies that are getting seeded with no business model and no conceivable way of recouping that money. But it hasn't become like a bubble-sized phenomenon the same way that's like crypto was. Crypto was like if you put dot crypto in your like in your company name, you were getting seeded by these venture funds with unbelievable amounts of money. There's a lot of .AIs coming out, but it's still not as prevalent. You only have 2 really big names playing. It's you got Gemini and ChatGPT, and then you have some other sort of chip manufacturers and things like that. That obviously Nvidia was the biggest unicorn out of all of them, but then you have Grok and some other competitors. But this is the very beginning of the AI market, like in the next 10 years. So we're right at the start. Inflated dollar being pumped to equities market while the debt burden is upon the nation. Inflated dollar being pumped. Yeah. So that's why I'm bullish. You said bearish. If they're inflating the dollar and they're pumping it into stocks, how would that be bearish? This week, short-term bullish, then switching up to bearish. All right, buddy, that's easy to say. It's like, yeah, it's gonna go the way it's supposed to go until it doesn't. Bruh, it's like, I mean, there's probably not that many fight fans in here, but anybody here who's a UFC fan, have you guys ever seen Henry Cejudo's breakdowns? Right? He'll be like, "Oh, so what you guys want to do here, guys?" Or like pause it. The guy's an Olympic gold medalist. He's obviously he knows what he's doing. But he'll pause the videos and do a reaction and be like, "So what you wanted to do, guys, is you want to move when someone's punching you so that you don't get punched in the face." Whoa, fucking God, whoa. Thanks. How did I could have figured the Mensa level IQ over here? Okay. That's kind of the same way of being like, which way is the market going to go? And they'll be like bearish. Be like, well, here's 5 reasons why it's bullish. They're like, yeah, no, I mean, it's going to go bullish for now, but like, then it won't. Oh, damn. Ah, fucking God. We got insider trading info over here. Ah, somebody fucking call in the platoon. Somebody call animal control. So fucking this is out of control. So I did my full research. I'm messing around. Send over the research to info@chartaddictsfx.com and let's read through it. If it's valid, I'm gonna give it to you, brother. Okay, so personally, let me see why some folks are bullish though. Christine, you're like, are you in a good mood or not? I promise I'm in a good mood, but I'm passionate about this. But he's saying is okay, why am I passionate about people having an opinion when it comes to their money? Because people are not going to listen unless you put the fucking pressure down, unless you put it in a way that's going to go through that thick skull. Because I had conversations with people. I tell them we got about 7 months until the next crypto bull run. Oh, okay, Roy. Ah, and then we were talking later. I'm like, what's going on? And they're like, just my life's not going the way I want. And financially, these things aren't working out. And like, I just have no hope for the future. And I'm like, well, that's all you got to do is just fucking have a strategy and then basically wait for 7 months and then basically get your life in order. You got a clear path forward that's present. It's a historic opportunity here that's very predictable. They're like, God, I didn't even think about that. Yeah, but it's like, yeah, but I just don't know. And I just gotta get through the thick. This is your money. This is your, fuck the money. This is your children's future. This is your family's future. This is your parents' future. This is your generation's future. You know, grandpapa, right? They're gonna hit you with they're gonna pull you on the thing. Hey, grandpapa, what were you doing? And then when Nvidia was hitting its first $1 trillion, what were you doing when Bitcoin was sitting at only 50K? Oh, I was dirt. I was watching dirt. I was watching, right? Is that the story you want to tell? The legacy? Was I here fucking watching Game of Thrones, right? They're gonna be like, wow, my grandpappy was a legend. No, they're gonna be like, how did it catch you? Fuck that one up. So long story short, listen to this information. If it sounds a little bit too straightforward, good. It's supposed to be. This is financial markets. This isn't fucking Chuck E. Cheese. Okay? Let's keep the show rolling. Good stuff. There's people saying it's going to tank the market, and surprising to me, it just kept pumping all year. I think it's going to go down in September. It's always the people with like that random opinion that end up being right. They're like, "Oh, I think it's going to go down in September," and you're like everything that I've done a shit ton of research. It kind of sounds about accurate with September. So, but who knows? Well, some people do. Here it is. Happy Sunday, y'all. It's going to be a Fed meeting. It's going to be a Fed meeting week, so obviously the markets are going to be erratic to start the week. So before we even go to technicals and all this stuff, think about how to game plan ahead of time. And so if you don't have a weekly schedule or outline that's a repeatable process, then you're not going to get consistent results. And so at Chart Addicts, everybody here has a consistent program that we follow, and it starts with the Sunday market outlook. The Sunday market outlook is where we prep the technical analysis, higher time frame zones, supply and demand levels that could get hit during the week. Okay? But throughout the week we have a very clear outline of what time we're going to be trading, how to approach pre-market analysis, the market open and post-market trading, when to walk away, how to minimize losses if there's a losing streak, how to maximize profits if you're winning and being consistent. So you have to have a process here. If you're going to go and wing it every week, oh, I'm looking for trade opportunities. But that's not the game. The game is not to find trade opportunities, right? That's one piece of the puzzle. It's like, oh, I'm a sniper. What do? I find targets. Who? What target? When? What's the objective? How many? Who are you bringing with you? It's like, I don't know. Find targets to shoot. Shoot at who? That dude was making, that dude was just making food, right? So you got to have a clearly defined plan. What does that look like? Sunday market analysis helps with this trying to figure it out on the spot mentality. You have a clearly like premeditated set of scenarios that you are prepared for. So if the market presents opportunities that may seem random to some other people, you already have a game plan of what to do. Correct? So that's how we approach trading here at Chart Addicts. Systematic approach. None of this bullshit journeyman stuff where you're winging it, kind of looking for trades and sifting through 50 different pairs and all this stuff. You got to have a system, okay? Have yours. With that being said, it's a Fed week, so the beginning of the week is going to be choppier than expected. Wednesday is going to provide that bullish surprise after a massive sort of attempt to grab liquidity. And so let me give you guys the game plan of how news days work. And there's more about this in the fundamentals course that we provide if you want a full breakdown start to finish of how to analyze and trade news events. But if you're a market maker or you're large market players and you are intending on buying, right? But there's a Fed meeting week coming and there's just not enough liquidity on the opposite side for you to continue to buy. What do? You might entice a lot of selling early in the week. Markets might start to drop through the result of a few large sell orders that then trigger the hedge funds and algo trading funds to become net sellers. Drag the price lower. Then once retail jumps in, throwing money on the short side, then we have that bullish surprise. And obviously everyone's liquidity becomes our profits. Hmm? You guys like that one? Right? Your stop loss is my entry, the whole nine. That's basically how it happens. Markets are very deliberate about how they take money from traders and how they move. There's a business model. It's accumulate orders. It is basically trap liquidity, entice traders and activate buy and sell stops on both sides of the market, and then eventually continue that original trend. Very clear, right? So let's go right into it. Don't get fooled by the market business model this week, and instead make sure that you're on the right side of the play. We'll save NASDAQ for last because got to do the best for last. Don't really like this recovery on gold. I know we busted out the magnets, but this is not a convincing recovery as of yet. We did have a clear break back above the lows here. We did have a break back above this daily floor, so you guys can see wick rejection, wick rejection, wick rejection. Seems like the market is allergic to this level. Every time that we get here, buyers step in, large buyer orders step in, large buying orders step in. Over here, we had a bit of a run on this area where a lot of people who were looking to buy, they said, oh, I missed these three opportunities. Now it's my time to shine. Let me jump in. And instead, stop losses get hit. Very clear higher low gets formed. And so signs of a bullish market shift. A very clear break back inside the zone and then a retest. This was a beautiful entry candle here. And then, of course, we had a run up to that first take profit level, 23.53, even though we missed it by about 0.5 points, right? So that's how things are shaping up. So it's looking pretty good. However, very choppy market movement. If you compare the aggression of this very deliberate bearish move, this sort of bearish retracement, and then compare that to this choppy market action, it doesn't really drive a lot of confidence here that buyers have stepped back in. It kind of looks like it's just enough of a retracement for another equal size move to potentially drop down. So I am seeing a potential continuation here to the downside for gold. However, if we just look at facts, that was speculation right there, right? That's what I feel like or think like is going to happen. What I actually see here is clearly higher lows are getting created, higher highs are being created, and as long as the market respects these higher lows, we're going to keep going and hitting these targets. So next idea is 23.23, same exact zone from last week. We want to see that retest tomorrow during the session and then a continuation up. First 23.53 and then 2400 and then 24.30. If you're a gold trader, just at least mark up these target zones. So you need your stop loss zone, which is the low of the wick, your entry, your first target, second target, third target. You're welcome. And if the market breaks through and closes below this floor, trade is no longer valid. Wait for the market to head down to the next daily level, rinse and repeat, do it all over again. The DXY is still using that 105.67 zone as support. I'm seeing a potential inverted head and shoulders forming here on the daily. So if we can respect this support, we will continue to head up to the next level, which is the 107.5 zone. If we have a failed break and we break below this structural support right here, then we're going to end up heading all the way back down to 103.7 and then potentially a little bit lower. Okay? And so I'm bullish on the DXY. I still believe that we can hold this zone and continue. We may not hit 107.5. We may come very close and then have a big retracement and then later come back to smash it. That could happen, but as of right now, everything is pointing to potential continuation here for the DXY. Okay, this would explain a little of my hesitation on gold. As the dollar continues to pump up, there's a chance that gold comes back for a retracement temporarily. Okay, US 30 played out almost perfectly. Never really tapped the 37.85. Again, came about 35 points away, so very close, but not close enough. So we've clearly established a new higher high. We've clearly established a new higher low. Buyers are in full control here. And so now it's really just about finding a potential opportunity on the smaller time frames. So two options here. We'll do option one, option two. And I'll try to stick to the higher time frames here for now, just because, whoa, there's a fly just, man. Trying to open the windows and get some fresh air, and then a couple flies are like, oh, it's a part. Oh, they got air conditioning in here. Oh, they got air conditioning here. They start going and tell their other flies they all want to post up and whatnot. Now I'm trying to stay focused here on the stream, and I'm fighting for my life. Okay. For people that don't know, um, basically it's when the U.S. government's budget beginning and ending period. You're talking about the fiscal year. Is it because September is the ending of the government's fiscal year? Yeah, but they're gonna roll that over. Says Roy, take me to dinner. But I don't ever say some shit like that again. All right? I ain't taking you to dinner. What we should do is we should do a giant event and have a bunch of folks out there, and we'll get you out there, get you a free seat out there, buddy. It's my best. Take me out to dinner. Homie, what? No diddy, son. So some people just want to party, bro. You gotta tell them no. You just gotta tell them no. Cat told us. All right. No, I didn't put Steve through too much. Steve, happy birthday, brother. This is what happens, right? It's probably the wrong place to be on your birthday is this live stream. Um, I don't know, dude. You know what I'm saying? Like, Josh, do you get what I'm saying? Am I crazy? But sometimes I feel like I don't know if I'm right or if this shit just, if I'm just completely off with it. I don't know, right? I know I'm dead certain about my opinion, but I just want to see, like, not even for validation, more so, what's the sense? Was that a Diddy statement? He said, "Want to take me shopping?" Like, I don't know. Let's talk about US 30. Let me get back on track. Two potential options higher. We have a shallow retracement option. Guys, this comes with the genius, right? They say it comes with the genius. Sometimes you get sidetracked. Sometimes I might say a funny joke, hash slinging slasher, right? Goes over everyone's heads. That was funny. You get the dichotomy, right? Um, That's what it takes. Or this is gonna turn, or this is gonna be like a big lecture kind of situation, and don't nobody want class on a Sunday at 7 p.m. All right. So option one, retest of 38.65, or option two, retest of 37.820. Let me repeat those two numbers. You can always go back in the recording. 38.65, 37.820. Those are the two retracement options for US 30. I think we see those early in the week because, like I said, like we might have a bullish start Sunday and then early Monday. What's going to happen? Everyone starts thinking bullish naturally. And so buyers step in. And then second half of the session on Monday, big selling, big candles. Wow, Roy, you said the market was bullish and now it's dropping and you don't know what you're talking about. And then Tuesday comes in. All right. Like, let's see if Roy was right. Let's see if the bullish recovery happened. No bullish recovery. Another aggressive selling day on Tuesday. You're sitting there thinking to yourself, two bullish days in a row. I learned this on baby pips. This is clearly a bear market, right? Now you start shorting. All right. Wednesday comes around, a little bit of sideways action. You keep shorting. Bro, I think the market's broken. I think the batteries are dead in this thing. Like, I keep trying to short, it's just not moving. Starts going your way just enough for you to start getting excited, loading up on sells right before the news. News comes out, no rate cuts. Wow, my trade is about to drop. By the time you blink, it dropped 200, 300 points, wicked all the way back up after missing your take profit you didn't set, and just ripping to the upside. But of course, we don't know what's going to happen next. There's no certainties in markets. Who knows, right? I don't know. But that's somebody's story this week, and don't let it be you. All right, good stuff. That's US 30. Last but not least, let's go straight to. We can talk about the Bank of Japan situation on another stream. That's a little too complex to cover now. And actually, I'll cover it now. Matter of fact, the yen equals monopoly money. Let me put this in fucking terms that everybody here can understand. Let me put this in layman's terms, right? Yen equals monopoly money. Monopoly money. Right? Probably not even. I love Monopoly. I'd probably spend real money on a Monopoly game. I wouldn't spend any of my real money buying the yen. That's just real. So Monopoly money might actually be worth more than the yen. Can we have that discussion? Is that a controversy? Yo, is Monopoly money worth more than the yen? If I buy a Monopoly set for $100 and I get X amount of Monopoly dollars, that's probably going to get me further than buying $100 worth of the yen. Yo, they're gonna come for me for that one. I might have just cracked the code, people. Everybody step aside. George Soros, move over, right? I just fucking cracked the Warren Buffett, who? All right, all right, all right. I digress. Yen equals monopoly money. That's what's happening. They're burning their currency up by overprinting it in order to deflate the value or inflate the value of their currency, which is making it drop, basically. And then basically you're trying to inflate your debt away. You print enough of your money that the value of your debt is in dollars. Let's say that you owe $1 trillion a year in interest on your debt. It's kind of what the government's going through. And the deficit is growing $1 trillion every 100 days. Madness, right? Now, if you print an extra couple $1 trillion, now in real terms, you only owe about, and let's say that the value of the dollar loses 5 or 10% of its value. Now you don't owe $1 trillion. You only owe, let's say, 800 billion or 850 billion in real terms. So you're inflating your debt away by overprinting the money. Now, what happens when you print money is that it's debt and you have to pay that shit back. And by they have to pay that shit back, we have to pay it back as taxpayers. The economy either grows to the point where we outpace the rate of debt, which is not going to happen because we can have crazy good growth, but they're doing ungodly things to the money printer. They're doing inconceivable damage by overprinting this money and just being like, oh, we're just going to solve all the issues and just print it and just fucking, because for them it's just signing a bill with some numbers on it and the money appears in the budgeting office. They don't think about the second, third order magnitude consequences of printing all that money, which is basically destroying your middle class. Lower income folks were not eating out or buying all this extra shit in the first place. Middle America, the middle class was the one buying cars, houses, vacations, credit card usage, all these things. Completely going to get destroyed. Who wins? The top 1% or the top 10% if you own assets? Right? So own assets, yen equals monopoly money. We're going to talk about that. And obviously, if you look at what UJ's been doing, I know we're going to get through this. You see the dollar's strength has gone through the roof, and you see the yen is completely destroyed. They were expecting some kind of rate hike in order to stabilize their economy. Did not happen. Yen fell off a cliff, and the dollar went up. This is called an interest rate differential or central bank divergence. You know, there's a divergence in the central bank policy, and there's a differential between the interest rates that's causing pressure. So you have 0% interest rates in Japan. You have 5.5% interest rates in America. Okay, yen falls off a cliff because it's invaluable. Dollar is in high demand. It keeps going up, and UJ will continue to go up for years to come. If you guys read any of the early articles we've had, the only consistent theme in all my articles from start to finish has been me shitting on the yen. And not because I don't like the Japanese people and not because I think the Bank of Japan is incompetent, but because they're literally in the worst position I could possibly imagine for a central bank. America's in a horrible spot, but we got the torch. Like we're the world's dominant currency. We're as a reserve currency, you get to survive longer than everyone else. I genuinely do worry about the Japanese folks and their ability to recover from that problem. So that's real. Okay. I have to find this article to show you guys the yen thing. So we'll do that at the very end so that we can finish off with NAS 100, which is what we'll be day trading every day this week live on the streams. Make sure to hit like, subscribe. If you guys are not already subscribed to the channel, we go live every morning at New York Market Open. I'm going to repeat that. We go live every morning, live, New York Market Open. Catch you there, turn on your notifications, and you'll see us on there. Oh, it's obviously very obvious what I'm looking for. 1620 or 17,623 retests. We might go here, bullish during Tokyo. I will be waiting for this consolidation to form. Tomorrow morning, I want to see a sharp retracement, and I'll be buying it up. Okay? If we break, then it's plan B, which is we're likely going to be bearish until the Fed meeting, and then I'll wait for the Fed meeting to start buying again. But until structure gets broken, I'll be trading it. Okay, we're coming up to these previous highs. Very important level of support here. Breaking these highs would be very important. And if we do, you gotta look left here at the historical data and see that there's a no traffic zone. And if we have a decisive closure back in this range, very likely that we fill all the way back up to the top of that zone. Okay, so I'm expecting the bullish break. If we have to come down for a sharp correction first before we go bullish, so be it. But whether we buy here or buy down lower at the structural daily support, I'm still bullish, and that's that. Got it? Clear, cool, calm, consistent, right? Seven. That's what it is. Is this Forex or futures? Well, I'm looking at the NAS 100 index. Well, this is a CFD quotes from Oanda, but the NAS 100 index as a whole, this is what we're tracking here. It's the same price structure. It's the same market structure if you're trading futures or Forex, or not Forex, but CFDs. The only difference is going to be the exact price. And so you'll just have to adjust. So let me see if this is a CFD. So Black Bull has a CFD quote, 17,760. This NASDAQ futures quote is, I think this is futures. No, this might be because Oanda doesn't even have CFDs. So I'm assuming that this is a futures quote, or just this is the spot price, which I believe this is just the spot price of the NAS 100 index. 1773. So you got 1773 here. You have the CFD quote 17,760. This is also CFDs. Let me see if I can find NDX 17,718. Very different chart here, actually. Obviously, it's very choppy. Let me see if I can find. Let's do NQ. E-mini futures. 875 for Christ's sake. But this is the exact same chart as the CFD chart or the spot chart. So if you're trading E-mini futures, then it's going to be the exact same as the Oanda chart. Have a safe trading week, everyone. I got to hop off too. It's been almost an hour. Happy and safe trading. Crush it. Great to see you guys. No rate cuts this week, so don't even try. Bullish market reaction, most likely. And then last but not least, quick announcement, live masterclass to learn the strategy that we trade every single morning, the one that we use to catch incredible trades live, just like this one from last week. Make sure you guys check out the live masterclass link in the description below. 3 days left to register. If you were on the live stream yesterday, the one where we did the introduction to NASDAQ bootcamp, or the introduction to NASDAQ webinar, you got a link there for a discount code. Use it. I think it was 30% off or something. Very generous. Make sure that you guys use that before it expires. 3 days left for you guys to register, or 2 days to register. Make sure you don't miss out. Head over to chartaddictsfx.com to live classes to get access and to see some more details, or just directly go to the link in the description for more details. We'll be giving away some of our merch tomorrow on the stream, so we'll see you there bright and early. Shout out to the 88.6 collection. And what else? Oh, go check out all the cool videos that we have. We just started dropping some of the first videos from our recent trip to the New York Stock Exchange. We went back up there to do a second follow-up interview with none other than Peter Tuchman. He was talking about in depth whether retail traders really have a chance to win. So go check that out. Of course, TradingView video is doing crazy numbers. Thank you guys for the support. It's almost at 23,000 views. So I know that I was tripping over this video flopping, and the first day it did flop. We had like 400 or 500 views on it. Not good. Then suddenly, sometime during London session that night, apparently the crowd overseas had a lot more interest in it than our crowd did. Started to pump up, had a couple thousand views overnight, and then the next day started getting recommended to the West, the Western world, basically, because of the success it had overseas. And then everyone started watching the interview, almost at 25K views. So thank you guys for that. That's awesome. What else? Of course, student spotlight interviews now out. We have another incredible one here with Luke, Yuri, Jensen. This one dropped last week, and then we had Mike and Josh, Bryce, Jacob. We got Lessman. I think we have one more dropping tomorrow, or two more dropping this week alone. Luke, Yuri. So make sure to stay tuned for those as we drop more student highlight interviews. All right. Happy safe trading this week. Take it easy. Peace.